Hi, one and all present here. This is Surya from Full Stack Web Development, Dr. S.N.S. Rajalakshmi College of Arts and Science. And today we are going to see about financial statement fraud and its introductions. Okay. And you know what is financial statement, right? So here we are moving with the history versions features, subtopic and financial statement fraud and the real life example along with the mind map. So financial statement it's nothing but a crucial tools for the decision making by the management or leaders or the regulators or the investigators. So when these statements are false, it's undermines trust in the financial markets along with the economic losses for the organization. The financial statement fraud is considered one of the most serious forms of the corporate fraud and it involves the senior management and affects the large number of stakeholders. So, due to this effect, the company brand or company corporate frauds and the series of forms of the each and every formats of the organization has been failed to improve their organization. An Eastern version. Earlier instance, first thing, in earlier they begin with the recording transaction. And the major corporate scandals they are followed are USA, WorldCom and Satyam in India. So here the regulatory response comes under the stricter accounting standard and Oxley Act that is SOX Act in 2002 and the auditing and the corporate governance norms. So here now the new trending option that is modern era is technology and the complex accounting techniques. So increase focus on the forensic accounting and the data analytics. Using the forensic accounting, they can analyze each and every data transaction along with the documents, and if any fraud happens, we can easily identify and we can move along with that features. So International and Deliberate Act, they use the committed by the top management. They usually use this top management to commit the forensic accounting to reduce the false accounting records. So using this forensic accounting, we can reduce the financial statement that misleads with the organization. So this concreted through the complex of the transactions. So each and every transactions will be complex and each and everything will be verified and concluded with the each and every day. So the result will be the financial and reputational damage. So here some of the subtopics I have given here. First one is types of financial statement. Second one common method. Third one motivates the fraud. Fourth one the red flags of financial statement. And the fifth one role of auditors and management. And the sixth one prevention and deduction techniques. So the revenue overstatement. First thing, we want to collect the documents. We move along with the most common type that is financial statement fraud and we want to find out the revenue to show their profit career. Second one, express understand. So here we want to reduce or inflate the net income. So assessed overstatement. Each and every values are reported in higher value actual worth. And liability understatement, it comes under hiding or understate liabilities to appear the financial stable. How to improve the disclosure? So finally, we are moving with the disclosure that is financial information is intentionally omitted or misprinted. So the timing and difference manipulation. So using the timing manipulation, the forensic accounts helps us to calculate the revenue or expenses across the accounting period. So misclassifications of the account. Each and everything comes under the financial items to distort the financial results. So here the real life example. First thing, first you want to audit. Using the auditor help, we want to identify the fraud risk during the audits. Second one, the corporate governance. So assess the board with strengthened internal controls. So investigates. So evaluate the company financial statement along with the transaction details. The forensic accounting. It's nothing but it's used to investigate and litigation cases. Regulatory bodies. It's used to ensure the compliance with the accounting standards and the law. So finally, it's a mind map. It's included the financial statement. It causes the opportunity rationalizations and different types of financial statement are revenue and expense manipulation. So what are the methods we are following here are false entries, and hidden liabilities. Finally, we are moving with the red flags to prevent each and every internal control along with the audits. The audit, what they will do, they want to find out the fraud statement and the duplicate statement in the ledger, and they want to complete the hidden liabilities along with the expense and the revenue frauds, and they finally comes under the documentation, and the final audit will be closed with the forensic accounting. Thank you all. And tomorrow's interaction, revenue recognition deduction. It's nothing but it's to identify the revenue record actually completely and direct accounts period. So it's use the premature, fictitious and overstretched revenue, and it comes under the auditor looks for the red flags, unusual revenue growth or end of the period along with the spikes and the weak internal controls. Okay, thank you.